All right, the Paycheck Protection Program, or the PPP, resumed yesterday with a new influx of $310 billion from the federal government that is intended for small businesses. For more on this right now, let's welcome Treasury Secretary Steven Mnuchin. And, Mr. Secretary, thank you for joining us today.
Good morning. It's good to be with you.
It's good to talk to you. You know, I was hoping we could start with a little bit of a dive into how you see this program, what's happened. There has been a lot of outrage out there as people found out that some big companies had applied, things like Ruth Chris Steakhouse, Shake Shack, AutoNation, some of their car dealers getting money in this program. And there have been some reports in the media about big banks putting those big customers first in line ahead of small businesses. I know that you've come out and said that this is really intended for small businesses that don't have access to the public markets. But I just wondered if you've had a change in your thinking on how this should be used as this whole situation evolved, as the markets kind of firmed up a bit, or if this was something that you thought from the very get-go and you think some of these big companies and big banks are in the wrong and we're bad actors in this situation. How did this evolve?
Well, let me first say I really think the program has been an incredible success. It's impacted over 30 million workers so far, and by the time we get through this funding, I think it will have impacted over 60 million workers, which, as I've said before, is about half the private workforce supporting small businesses. That was always the President and Congress's intention, and that's what we're delivering on. I think it is unfortunate that there's a small number of companies that have created a lot of publicity that took loans. I think it was inappropriate for most of these companies to take the loans. It was clear there was a certification. We don't think that they ever should have been allowed to. We put out an FAQ clarifying the certification and saying that if they paid back the loans in 2 weeks so that we could reprocess that money, they would have no liability. Otherwise, they would have liability. And I must say I'm encouraged by the number of people that have paid them back. I never expected in a million years that the Los Angeles Lakers, which I'm a big fan of the team, but I'm not a big fan of the fact that they took a $4.6 million loan. I think that's outrageous, and I'm glad they've returned it, or they would have had liability. And let me just say, I'm going to be putting out an announcement this morning that for any loan over $2 million, the SBA will be doing a full review of that loan before there is loan forgiveness. So we will make sure that what was the intent for taxpayers is fulfilled here. But let me just say again, the program, overwhelming success. 1 million of the loans so far are for companies under 10 people.
What do you think the impact has been in terms of trying to keep people employed? Have there been people who have gone and had to file for unemployment, or do you think that this program has saved a lot of the people from actually having to do that and has kept them in their workplace?
I think it saved a lot of people, and I think for those people that are on unemployment, it's going to bring a lot of people back. Matter of fact, we're having a small business event at the White House today where, unlike the Lakers stories, we're going to hear some stories of great small businesses who this really saved their business. And I can tell you, the number of emails I get from people who send on the stories of a legitimate small business that was about to close their doors, that is either keeping their people on or rehiring people, or businesses that had to close their doors because through no fault of their own, the city shut down business, is going to bring back those people. So as we reopen, these companies will have the liquidity to pay their workers.
It occurs to me that not every part of the country is dealing with this equally. There were a lot of states that closed down later than others, and there are obviously others that are opening up quite a bit earlier. Are any of these funds going to be directed to the areas that are most hard hit to try and make sure that the businesses that maybe have been forced to close for a couple of months already and could continue to see a long closure, would those businesses be prioritized?
Well, we're absolutely working on that, and we want to make sure that this money is getting to where it should be. And let me say I'm highly encouraged that the average loan size is coming down. Matter of fact, the average loan size in the backlog was less than $100,000. I'm also encouraged I'm on a call every day where we have over 100 CDFIs that are making loans. We think we're going to increase that to 400. So particularly in communities that have been hardest hit, that we make sure that they get that money. And we're going to do what we need to do to make sure that everybody is treated fairly in this program.
Mr. Secretary, what do you tell people who say, look, some of these big companies maybe should or shouldn't have tried to get this money. But do you blame the banks that issued these loans to them, given the rules that you had spelled out, or were the rules themselves not clear enough?
The rules were very clear, but let me also say the certification was a certification by the borrower. And one of the things we did is we wanted to make it very easy. The banks were really middlemen here, and the banks were not required to do the diligence. I really fault the borrowers who made these certifications. Now, there were some banks early on who put things up on their website and prioritized their customers. We immediately told them that was wrong. They took it down. So, I want to be very clear. It's the borrowers who have criminal liability if they made this certification and it's not true. And as I said, we're going to do a full audit of every loan over $2 million. This was a program designed for small businesses. It was not a program that was designed for public companies that had liquidity. Again, the certification was very clear in saying that if people had other sources of liquidity, they could not take this loan.
Right. Mr. Secretary, though, what do you say about those larger companies that may be returning those loans, but the true effect of it is that they're going to continue to furlough employees to the degree that this is an employment for all program? Shake Shack is not necessarily going to now put people back on the payrolls, whereas had they had access to some of these loans, if you felt that they were properly eligible, despite whatever liquidity you think they might have, they may decide as a business decision not to bring people back, whereas a lot of the smaller companies who would have access to this would bring people back knowing that they'd get the loan ultimately forgiven and would keep people in their jobs.
Well, again, let me just be clear. The purpose of this program was not social welfare for big business. The purpose of this program was to help small business. It's a small business program, and it was meant for small businesses that didn't have liquidity. Now, there are a lot of big businesses who are doing the right thing and keeping their people on the payroll. Some of them are cutting their payroll a little bit in terms of not paying people as much, but there's plenty of businesses that have been impacted by this that are doing the right thing for their employees. And again, every business has to decide what they want to do. Every business owner has to decide. If you're a private equity firm, if you're a venture capital firm and you want to support your companies and you want to support your employees, I would expect most of them that have the liquidity will support it. Obviously, there are businesses that were terribly impacted by this where people can't do that. But, I want to commend many businesses are doing the right thing for their employees. And this business, this small business, again, we've impacted 30 million workers that would not have otherwise been able to be paid because 50% of our economy is truly small businesses.
Right. And Mr. Secretary, the other question I get asked all the time, I'm curious if you do too, how this bailout differs or is similar to the TARP bailouts after 2008 and whether taxpayers ultimately are going to get paid back as they did after 2008. Given the grants that are involved and the loan forgivenesses that are involved, can you imagine a scenario where taxpayers actually get their money back in the traditional sense of people paying these loans back and getting interest for it?
Well, this is a completely different situation than the financial crisis. I mean, this is a situation, business had nothing to do with this. This was the fact that the silent killer, this virus showed up in the economy, that we had to close down major parts of our economy for health reasons. And really, the businesses had nothing to do with this. So this was not bad business decisions like in the financial crisis. This was not over-levered real estate. So in this program, there's a very significant part of these programs that are grants, as in the PPP. There's enhanced unemployment insurance, which is meant to protect workers that got laid off by companies. There's our direct deposits. We're over 100 million payments of direct deposits and checks and now sending prepaid debit cards. So we want to get those all out to people. So this is unprecedented liquidity being pumped into the system. Now, there is a component of this which where we can work with the Fed, which is an investment to support lending facilities, We made loans. We're in the process of making loans to airlines, national securities. On those, I do expect we'll get paid back. But a big component of this is an investment in the U.S. economy, in U.S. workers, to support them through this difficult time that they had nothing to do with.
Mr. Secretary, let's talk a little bit about the states and municipalities that are also struggling and have said that they need the money. We spoke with New Jersey Governor Phil Murphy yesterday, who said that he had some productive conversations with you over the weekend about what that money can and can't be used for. And let's just use New Jersey as an example. They say that they're going to run out of cash in 4 to 6 weeks if they can't use some of that federal money for other things than what they feel like they're allowed to right now. Where does that stand, and how should these states and municipalities be thinking about this?
Well, I've had multiple conversations with Phil, and I'm glad he characterized them as productive. I've also spoken to many other governors. I've participated with the president and vice president on video calls with the governors. As you know, there was a chunk of money. It's now all been sent out to the states and the cities to cover them for coronavirus expenses. And again, we've been clear that to the extent people had to use police to enforce coronavirus issues, public safety, things like that, that they could allocate that money to the coronavirus issues, but that this was not about lost revenues, and that's the way the bill was written. We've also worked with the Federal Reserve. I think you saw yesterday expanding the Federal Reserve facility to states and cities for liquidity problems, because we know just as we pushed back tax revenues, they did, which will deal with the liquidity situation. And I think, as you know, the president said that, we'll have a debate at Congress, in the House and the Senate, to consider this issue going forward. But, there are issues. This isn't going to be just a federal bailout of the states. On the other hand, this will be an ongoing discussion.
Mr. Secretary, there's been a raucous debate about whether the Federal Reserve should buy stocks. What do you think?
I'm not going to specifically comment on what the Federal Reserve should or shouldn't do in the future, but I would say I think that's highly unlikely.
Let me ask you a different question. It's about buying stocks, but in a different way. It's actually corporations buying back their own stock. There's also been a raucous debate in this country about buybacks, companies that bought back a lot of their stock over the past several years and then didn't have a rainy day fund for this moment. Do you have a view on that? PepsiCo, for example, today said they were actually going to buy back stock, and we've heard from a lot of other companies saying they plan to buy back stock.
Well, I would think in this period of time, most companies are announcing that they're cutting their dividend and they're cutting their buyback programs because they are investing in their business. And I think that's the right thing to do. Now, there may be a few times where, companies are performing so well, even through this, that they have excess capital, that they're looking at capital allocation. But I would expect that that's a very, very small part of the situations. And I think, as you know, we've put restrictions on any of these direct government programs. So if we're making direct loans to airlines or national securities, or we're making direct loans in the Main Street program, there are restrictions on compensation and share buybacks. So we think that's the appropriate thing to do.
Mr. Secretary, just quickly going back to the issue with the states, I understand that some of these states have gotten a little piggish. I've heard about the president of the Senate in Illinois asking for, I think, $10 billion to bail out the pension fund that's been underfunded for decades there. That seems ridiculous. But what do you think personally about the idea about whether the states should be allowed to use those funds from a lost revenue perspective in terms of trying to keep teachers on, in terms of trying to keep firemen or policemen on the job as we continue to look at these states that have been shut down and hit the hardest? Is that fair in your choice? I realize that's not the way the bill is written, but would you advocate for the states to be able to use the money that way?
Well, as you said, in the two extremes, I think that states that were mismanaged, this shouldn't be a bailout of states that were mismanaged because of a coronavirus. I would also say states that had specifically large expenses as a result of the coronavirus, like New York and New Jersey, I think it was the right thing that the federal government gave them money for the coronavirus expenses. The issue about lost revenues is something that needs to be debated and discussed in the House and the Senate. I think, every single one of these bills we've done has been done on an overwhelming bipartisan support. In the Senate, the last two times, you either had a 96-0 vote or you had it by unanimous consent, which was, again, everybody supporting it. So these will be discussions we'll be having with both the House and the Senate.